Hello everyone, our guest today is Rahul Singh. Rahul is the CIO Equities at Tata Mutual Fund. He heads the fund management and equity research teams there. He's a mechanical engineer from IIT Bombay and an MBA in finance from IIM Lucknow. By way of background, Rahul is a veteran in financial services with nearly or probably more than 26 years behind him in this space. Thanks for joining us today, Rahul.
Thank you, Neelabh.
So we'll quickly get into our topic for the day. We are going to talk about multi-cap funds. Rahul, why don't you help us understand what are multi-cap funds?
So multi-cap funds are basically a separate category which was created a couple of 3 years back, where what we have to comply with or what we have to put in the fund is a combination of large cap, mid cap, small cap. So the minimum requirement for large cap, mid cap and small cap categories to invest in this fund is 25% each. And then the remaining 25% which is left can be deployed at the fund manager's discretion either into large cap, mid cap, small cap. So essentially this is a fund which compulsorily asks the fund manager to deploy 25% at least in each of the three categories, which is large cap, mid cap and small cap. It's very different from usual large cap category or the large and mid cap category which you might have come across, or even the flexi cap category. And that's really where the differentiation is in this multi-cap category versus other categories.
Understood. So would you say that this a multi-cap fund brings in different elements of risk with a specific flavor of market timing brought in for the remaining 25%?
Yeah, that's exactly right. I think this fund, because it is deployed across large cap, mid cap and small cap, also obviously means that one, you are getting on the positive side of things, you're getting a broad participation in the market. You're not just stuck to the large cap, the large companies, but you're also buying the mid and small size companies where you typically tend to generate higher returns. At the same time, this fund would obviously mean that because you have more mid and small, sometimes it can add to the risk profile or add to the risk which is present in the market. And therefore, that last 25% is left to the discretion of the fund manager to deploy, either in large cap, or if there is uncertainty in the market or volatility in the market, to take time to deploy the 25% and not really deploy it all at once. So that flexibility is there, so that on the other side of the risk, you can manage the risk a little bit by keeping that 25% flexible.
Right. So you use the word flexibility. Is a multi-cap fund same as a flexi-cap fund, or that is a different category altogether?
That's a completely different category. Flexi-cap is a category where there are no limitations on how much you can keep in each category. So you can have large cap, mid cap and small cap distribution as you like. There is no fixed minimum like it is there in multi-cap to have minimum 25% in each category. There is no such minimum criteria in flexi-cap. So technically the fund manager is free to take a call that if he thinks that the large cap is going to do well or mid is going to do well, he can increase or decrease the proportions of those categories depending upon what his view might be at that point of time.
Understood. And a very factual question. How are the three market cap segments itself defined? So large cap, small cap and mid cap, what are the thresholds?
So large caps are basically when you rank all the companies which are listed on the stock exchanges based on the market capitalization. The first 100 companies are the large cap when you rank them on the market capitalization. From 101st to the 250th company in that rank, in that list, is what comprises mid-cap segment. And all the companies from 251st onwards to the number of companies which are listed, which is in thousands, constitutes the small cap segment. So it is first 100 large cap, the next 150 is mid cap, and anything beyond that is the small cap segment.
Understood. So, correction to what I said, it's not based on the market capitalization, but based on the ranking. So, in the sense, there's not a hard threshold of market capitalization itself to accommodate for market movements, but the top 100, the next 150, and then all the others after that.
Yes, and the list keeps changing. So, every 6 months, certain companies which were mid caps become large caps because their stocks might have done well, so they move up the ranking. And certain companies which were large caps sometimes become mid caps if they don't do well. So the list is published every 6 months by SEBI, and we have to stick to that list when we deploy our funds in large cap, mid cap, and for the next 6 months.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.